So to the investors that have 10 to 15 properties that are waiting for a bargain post-July, dumb people, and I'm sorry if someone wants to buy with a friend, I'm sorry for calling you dumb, but in my opinion, for the large majority of cases, buying with a friend is dumb.
Hi guys, welcome to another episode. Hopefully today you're going to get lots of information from our guest. Arkadiusz is the next guest today, and he's got a property strategist and has an awesome amount of knowledge around investing in property and has worked with lots and lots of customers that have done really, really well. And I hope that today's episode really enriches you with more information about how to invest and also some of those quirks that you might not know, especially from the standpoint of first home buyers. And if you're a first home buyer or not yet a first home buyer and thinking about buying your first property, perhaps this episode is going to be really helpful for you.
Well, that's what insurance is.
Yeah.
And what I say with clients is, I hope we pay for this. And we look at each other in 10 years' time and go, we paid all this premium and we didn't use it, rather than, oh my God, we didn't have it.
Yeah.
Right.
And
So
that's
I
just
think-
one of the other ways that you sort of help your clients.
Yeah.
Is insurance. But I'm assuming like you don't just help your clients with that. So tell us, like, how do you actually help your clients?
Are we recording already?
You know what? I'm just gonna
Maybe
roll.
right off the bat.
Ease into it.
Flowed
Like, you picked it
straight
up,
in.
yeah. I thought I'd
Yeah,
sneak it in there and get us sort of rolling, right? Because I think it's important, right? So at least that way we get a bit of an understanding of how you help your clients and some of the aspects of some of the stuff that you do.
I was actually thinking about this morning in the shower.
Uh-huh.
Not about you, about the question.
That's all right. That's all right.
Now, I was thinking, like, I'm different for everyone. And I think everyone's journey in financial advice or money is different.
Yeah.
You know, so last week I had a 67-year-old lady that's looking to retire and wants to sell all of her assets. You know, she's like, I don't want to affect my pension, etc. So how I help that person will be different to the 40 individuals that are coming to an event today that are looking to buy their first home.
Yeah.
So their journey is going to be very different. Or the meeting I had yesterday with a business that's trying to go from $1 million of revenue to 3. You know, so I guess how I help is, I guess I'm just people's best money friend. And that's how I like to sort of address myself. And that's different to everyone. So maybe we can expand on that today.
People's best money friend. I like that.
We've seen that name as well too.
Yeah.
The people's best money friend.
Yeah,
I like that.
Chief Money Friend, I think I have as
Chief
my
Money
title,
Friends, yes.
CMF. Yeah.
Yeah.
So I'm a CMF, not CEO, not CEO.
People are coming to you for all aspects of building wealth, and you're comfortable having those conversations with them. Is that your forte, you think? That's where your business comes from?
Yeah, for sure. I think, you know, essentially what I'm good at is really understanding how to ask questions. I've said this before, and if you're seeing me again, I'm sorry, but you know, essentially the only reason my industry exists and the only reason financial advice exists is not because we have all the answers. It's because we know what questions to ask.
Yes.
That's it. You know, so obviously I have education and tools that allow me to find the answers. But if you Google hard enough and ChatGPT's out, it will give you the answers.
Yeah.
You know, so I guess my skill set is helping people identify their goals, needs, objectives, you know, because people just don't do that. People don't write things down, and we help people do that. And then from there, we either myself or my advisory panel, including Duo Tax, assist people in achieving their goals or getting the best appreciation or ensuring that the property that they buy is a smart tax asset. So I guess what I do is always different, but that's sort of what I do.
Tailored to the client and what their unique.
It's always
needs are.
tailored. It's not a sausage factory here.
Yeah. Yeah.
You
Nice.
know?
So I mean, I'm assuming you had a bit of a story to get to where you are today and what you're doing. So tell us a little bit about Arkadiusz and how he ended up to where he is right now.
Yeah, how far do you want to go?
Well, I know that we grew up in Cabramatta. That's sort of
I guess
early roots.
Yeah, grew up in Cabramatta, born and raised, and my mum and dad still live there and they love it. And I'm not Asian, not Vietnamese, you know. I'm the token white guy. I guess growing up in Cabramatta, my mum didn't want me to be around, you know, the stuff that was happening at the time. Growing up, I grew up in the 90s, so pretty rough time for Cabramatta, you know, leading into the back of the 5T stuff and all that sort of thing.
Yep.
So my mum made me catch a train to the city, and, you know, I was surrounded by a lot of wealthy families with kids going to school in the city because I went to a public school. My auntie said that I lived at her housing commission in Ultimo. So that's how I slotted in there.
Yeah.
You know, please don't audit us. That was a long time ago. But essentially, yeah, fell into that, and then, you know, was surrounded by business and, you know, always hustled, I guess, you know, sold ice blocks and cans of Coke, and then coming in, transitioning to high school. Didn't really like high school, funny enough.
Yeah.
But I don't really like education that tells you what to do. I like to sort of find my own pathway, and then fell into sales, got offered a job by the COO of the largest insurance company of Australia because I knocked on his door, selling door-to-door Foxtel, funny enough. He offered me a job, and then sort of went from insurance to superannuation to finance to property, and then it's sort of, accounting, and you sort of pick up your courses and your accreditations, and now I'm here questioning whether I should still be an advisor or whether I should move more towards a CEO. I hate that title. And I guess that's the story. So just fell into it. Really loved it. I've always been fascinated by money and how money works, because my family haven't been very good with it and still aren't.
Yeah.
And, I've learned from my mistakes, and I tend to grow with our client base. Our let's grow together is a big thing in our business, and we learn together, and we work through legislation changes, and we work through, rate rises. I think we're going to see a lot of that moving forward too.
Yeah, definitely.
So what you've created is a holistic advisory organization that can help people from end to end.
Yep.
And is there any limitations to what you don't do to help them, or in terms of your services?
Me personally, yes, there are limitations because I'm not accredited with certain things. As a business, we have an advisory panel that can pretty much help with anything when it comes to money, even, foreign-based investments and stuff like that. But as a business and as a core, all we do is help first home buyers now. Yep. So I came out 3 weeks ago and basically just said, we don't help anyone that already has a property.
All right.
Now, there is a reason behind that. I know a lot of brokers and finance businesses don't really want to deal with first home buyers, but what we have been finding is when clients come into our office with an existing asset, even if it's the right property, if they've had the structure and the strategy of the loan wrong, the only way to buy another one is they have to sell the existing asset. And this has been, funny enough, is we've actually turned away more business this year than we've taken on due to that circumstance. So yes, we do everything, and yes, we are very educated in what we do. However, as a business moving forward, the only thing we do is help first home buyers. Unless you've bought well, your structure is appropriate, and we can help you. So sometimes people are like, can you please help me? Like, do you want me to be honest? No. Because if you want our help, you have to sell the asset. Or, hey, you did really well. Yes, we can help you. Let's buy you something else or keep building wealth. So that's what we do. And that's pretty big and scary to do. And we're this close to saying, and we only help people in New South Wales.
Okay.
So maybe fast forward a month.
Yeah.
So tell us then, if a first home buyer is watching this right now and they're unsure about what to do, and they're thinking about, maybe I want to do an investment, maybe I don't know what to do. What steps could they take maybe once they come and see you? What would be some of the things that you could tell those people watching us right now if they're a bit unsure about the interest rate rises, or they don't know what the next steps are to take? What would you say to those guys right now?
Number one, define what you're not sure about. So which one do we want to tackle first? Do we want to tackle, should I buy as an investment or should I buy as an owner-occupier?
Is that
great?
Is that one I think it's a great start.
Yeah. Principal place of residence tax exemption. That's one of the biggest tax breaks that you'll have in Australia.
Okay.
Introduced by the government, basically saying that if you buy a place and you just live in it and define it as your principal place of residence. Now, ladies and gentlemen, there is no time frame on this, just FYI, and you just have to change your address, move your furniture in, and actually establish this place. Some accountants will say 6 months, 12, there is no time. But say you have to actually establish. Now, if you move out of that property, even if you rent it out, as long as you don't buy another property and establish that other property as your principal place of residence, if you sell that property, the profit is tax-free. So my biggest thing that I speak with first home buyers is the property you buy today, tomorrow, in 3 months, 6 months, 12 months time, is this your forever home? Yes or no? Probably not.
Yeah, it makes sense.
The reality of the circumstances, with rising rates, with reduced serviceability, you'll probably have to sell that asset to buy your next one. Especially if you're a young person that wants to have a family and wants a family home, and so on and so on. So if you buy an investment first, well, what's going to happen is if you do have to sell it, you have to pay tax on the capital gains.
It's an investment, right?
Correct. So our approach for the most part is see what your budget can buy that you can live in, even if it's for a short period. Why? Because even if you move out and you run it as an investment, if you do have to sell it, you get that money tax-free.
So you're saying what is non-investment is a better investment strategy than buying an investment property to as your first property?
Yes, but no. So when you're buying that owner-occupier, put the investment mindset on. So wear the hat. So what I would say then is if you know what your budget is, right? i.e. my budget is $800,000. Okay, go to the sold section of realestate.com and domain and put in properties that have sold in the last 3 to 6 months. This is our first step prior to anyone coming in. Why? The sold section is the truest definition of what the market is. Okay, not the spruiker trying to sell you an off the plan property. We don't know what that's going to be worth in 2 years. Okay,
Makes sense.
Go to the sold section and go, what has sold in Brisbane, in Melbourne, in Sydney, whatever your flavor is, because people will be listening to this from all different states. And then go, how much is that property worth today? Call Duo Tax and be like, hey, if I bought this place, what would be the depreciation?
Cost you nothing.
Check the rent. You know, it costs you nothing to get a quote from Duo Tax. Yeah. Do the numbers. Numbers don't lie. That's the beautiful thing.
Yes,
right?
that's true.
So do the numbers. If I bought this property in Dulwich Hill versus the property in Brisbane, which one would be better for me today? And you start routing, right? You start routing your journey. So if I was a first home buyer, that's the first step. Identify your budget. And if you're questioning the difference between investment or owner-occupier first, we can cross that path later. Go look at what your budget buys you. Do the numbers, go from there. This is prior to pre-approval.
Yeah,
still.
it is such a great point, because I think a lot of news, and you hear a lot of these big buzzwords come about. People are saying it's too expensive to buy in Sydney. They're
Define
automatically
expensive, yeah.
They're automatically discounting certain things because, you know, they read in headline, and I think it's really great to say that, you know, take into consideration the individual circumstances and really dig deep on what the client's needs and wants are, which is very important.
Yeah, look, like I'm going to sound like a conspiracy theorist here, but the news is news.
Yeah.
We're all supposed to die from COVID.
Yes.
Okay, we're still here.
We are.
People definitely passed away and all that sort of thing, and there was this trouble, but rising rates are rising rates. In my opinion, money is still cheap. You know, if you actually cash flow an investment property on the base rates, even at 8%, it still makes sense.
And there are properties out there, right, that can yield us some decent percentages.
Yeah, 100%. If that's your flavor, if you're looking for yield, buy commercial.
Great.
We're sitting in a commercial asset today. Great depreciation.
Yep.
You know, yields well. You can get astronomical rent.
Very good depreciation.
Yeah.
I
You
believe.
just did it prior to walking in.
Walking into this store. Yeah,
Yeah.
exactly. So definitely.
I think defining your flavor. So as a first home buyer, I hope that answers that question.
Yeah.
For first home buyers is define your budget, go to the sold section, even prior to pre-approval. And it'll also help you navigate because agents will underguide, all that sort of thing. So you're not wasting time. So when you're pre-approved, you're ready to go.
Yes.
And you've got data. You know what is sold in this suburb. And if the wrong agent has the right listing, you know that this agent always goes to auction and sells 150K more. Don't waste your time. Right? Because pre-approvals are 90 days.
And you help clients throughout this whole process, because it seems it can be very overwhelming for a first timer, you know, going through that process. Is this something that you help your clients walk them through this process as well?
Yep. So we have a system and a process to help. So videos and content and so on, but we can help clients as little or as much as they like, all the way through to a full buyer's agent service where a buyer's agent is looking full time. However, if a client's like, I just want to pay you, Arkadiusz, please, we just want to pay you and your team $22,000. You do everything.
Yep.
Still go put sold properties in the sheet. Because if I show you the best investment that ticks all the boxes, cash flows well, has amazing capital growth, valuation is 25% more than the purchase price, you won't understand because you have nothing to compare it to. And trust is a strong word. Anyone says, trust me, don't trust them. You know, so go to the sold section, identify that budget, even if you want to work with us on this level, which a lot don't need to, but even if you do, you're about to spend the most money you're ever going to spend in your life.
Yes. Do
You
some
know,
research.
The numbers don't lie in the stats, right?
100%.
Great point.
Yeah.
It's definitely good value, especially from a first home. And so most of your clientele are dealing with first home. That's your ideal client.
Moving forward, yes, because
great.
it is an empty blank canvas.
Yep.
And we can
Mentor.
create and define wealth.
Yeah. Yep.
Now, what about for the first home buyer who's thinking about, you touched on this earlier, but if they want to buy an owner-occupier home first, they want to go live in it, should they still then come to you and discuss potential options around doing that? Because they may just think, you know what, I'm going to live in it. Why do I have to talk to someone like Arkadiusz for? Because it's not an investment. Is that someone who's still worth having a chat if they're just thinking, I want to owner-occupier home?
Look, I think everyone needs advice. And the question is, do you want to buy your house and make no money? What do you think the answer is?
Yes. Well, I hope they say no.
I want to make no money.
Yeah, and I put myself in that situation. If I take myself all the way back to 2010, before I bought my first property, and if I knew what I knew now, I would have gone in to get advice from someone like Arkadiusz or someone that understands property well and numbers well to give me advice and say, hey, if you're going to make the one move, your first move, and you intend to not make it your last move, you best speak to somebody that knows what they're doing, to some capacity at least. And of course, they're not all bred the same when it comes to buyer's agency and advisory firms.
No.
But it's really good to I guess, be engaged in this type of level of marketing and media to get the right information from the right people that you feel comfortable with. And then you can make an informed decision about, you know what, I'd be comfortable to put my trust in this person.
100%.
And that's really important too.
Definitely.
In this day and age, we can say that, because I think 2010, I wouldn't say there was many of these around where you could actually tune into something.
You had to hunt for the information. You had to read books and 100%.
Yeah, it's so true. And I think a lot of the pressures now of these first home buyers, they feel a lot of the pressures of the rising interest rates and the cost of living and things like that. And I think, they can get stuck and caught in their own head. And I know, Arkadiusz, you do a lot of, stuff to help build that mindset, to help build yourself. So could you touch on some of those things, that how you build yourself with that strong mindset, with that, to not take on all this information? Could you touch on a bit of stuff like that? Because I know that you do dabble in that stuff a little bit.
Cold showers every morning.
Now,
before I answer that question, I just want to go back to one thing really quickly, because you touched on, should an owner-occupier still get advice?
Yes.
Now, as an owner-occupier, you can, walk into a bank and they will just tell you what option is best for them. Or you can go to a firm, and you don't have to use me. Okay, go to your broker. But if your broker is just showing you one option, they're not doing the right thing. Okay, so what does it look like for you to buy with a 5% deposit, a 10% deposit, a 15% deposit, a 20% deposit? What does it look like with the stamp duty exemption or land tax, first home buyer's choice, which might disappear post-July, but we'll see what happens, right? But what does it look like? What does it look like with a guarantor? What does it look like if you take some of the loan interest only to offset your savings? Because what this is going to do, even because some people don't want to buy 10 properties, that's cool. Maybe you just want to make one move. But let me ask you a question. If you can make one move and retain $200,000 of your cash, would you prefer that? Yes, get advice. Right, because that's what the difference is.
And it's all about showing them and giving them options as to what is possible. And that's the biggest downside when you're investing and you're not sure what to do, or you don't have the right advisory team with you. You truly don't know what options you have. And if you do have those options, which I think you've pointed out some amazing options, some of those things that were talked about, but parental guarantor, so basic, so simple. Yet how many people advise it on every occasion? Not enough.
No, people are afraid.
And especially on a first home buyer, like they would jump at this idea because it's such an eye opener. And most of the time people buying their first are young enough to leverage on their parents, right? For help. 100%. And they need to, I did.
Yeah, 100%. But the thing is, like, even if you have a deposit, right? And we're going to go back to how do you block out the noise? I think if someone is telling you something and trying to give you advice, you should not listen. If someone's saying the market is going to crash on this date, rates are going up and this is going to happen, you should not listen. You should understand why, right? So I think when
dig a little bit deeper by the sounds of things. I think people take too much of top value, face value, and then to dig and find out some more stuff for themselves.
These are headlines, right?
Yeah, headlines. Exactly right.
The market's going to drop by 25%. Why? In which suburb?
Yep.
Okay, the market, period. But some are going to go up, right? Right? Not everything is going to go down. Like this share market has gone down, but not everything has gone down.
Yeah.
Agreed.
So I think when you're taking information, if anyone is trying to give you advice, run. As weird as that sounds. In the initial stages especially. And what we say, like when clients schedule a phone call, etc., we're like, if you're looking for a firm to tell you what to do, we're not the right fit. If you're looking for a firm to help you understand your options, something will stand out to you. And if you point at the wrong thing,
great point.
I'll be like, I think this is wrong because of this.
Yep.
And you might say, oh, but this suits me. I'm like, oh, okay, maybe it does. So I think that's really how I do it. And with anything,
I'm going to show my vulnerability here, but I was sold into a property that was that I purchased off the plan, and they very much, I won't name the names, but essentially, when I was in the early stages of my investing journey, I bought my first property, and then the market grew. I had capital growth, and what do you do with capital growth? You take out the
capitalize
equity.
on it.
Yeah, you capitalize on it. Take out the equity, and I thought, what am I going to do? I got excited, especially as a kid. I mean, I was probably 24, 25 by that stage, and I felt like I was a kid in this investment game. And I thought, you know what? Got to do something. And as soon as I started talking to people, bang, there was people there ready to go, pushing agendas like property market's hot. you've got to buy here, you've got to buy in this area, you've got to get this into this apartment. It's affordable, depreciation strong. I'm selling depreciation schedules and I'm getting suckered into my own game.
Were you selling them at the time?
I wasn't, not at that stage.
That's why you got.
But at the later stage, I was. You know, it kind of, funnily enough, it was.
It's losing money. It's negative geared, and the depreciation is strong. It's like, ooh, that sounds good.
Years later, so I actually sold that property. What I thought was neutral, but take into consideration interest, depreciation, and selling it for the same price you bought it for. Not to mention inflation. Now that we all know about it very well, it was one of the biggest mistakes of my investing journey, and it set me back a bit. But I think it's one of those learning lessons. And you said that when someone's trying to sell you something, be very, very mindful.
Makes sense.
Of the agenda behind that sale.
It sucks, and we see it all the time, and it's really sad. It's genuinely sad that we see people shoving things down people's throats that are not in the best interest of someone. And if you're going to an advice firm and they're recommending property to you like a real estate agent, you see what I'm saying here?
Alarm bells. Yeah. And if it wasn't, I was fortunate enough to go on and build a business and made up for some of those losses.
Yeah.
But not everybody's in that position sometimes. And if I had the same day job that I had back then, I probably would have struggled to come out of that.
You'd be in
rut
trouble
that I put myself into.
Yeah, makes sense. Yep.
So, especially when you're down, $50,000, $70,000, sometimes that's all people make in a whole financial year. Yeah. And it's hard work coming back from that, especially we've got to pay for electricity bills
as well.
And post-tax. Yes, electricity bills and all the other stuff that comes with living a life. And having a lifestyle, even if a basic one, can really, really get you down. So be super mindful about the investment decisions you make,
exactly right.
even if they're your first home.
Yeah,
so
100%. Like, who here wants to make a mistake?
No.
Like, and if you're watching this already, and we're 23 minutes in or whatever this edit is, if you're watching this already, you're already 100 steps ahead of everyone else.
So true.
Because you're
making
already
moves about your life.
100%. Analysis paralysis as well. But we're here not talking about how many properties we own. No one's going to know what car I drive, right? And that's what's important, because it doesn't matter. What matters is the information that we give you, how that applies to you, and whether it makes sense or not.
That's right. I think the applying to you part is very big as well too. People will get information from everybody that doesn't necessarily apply to them. And I think that's why they need to get their individual advice, have the discussion with people, and they can find out what works best for them.
100%. Like the mum and dad advice.
Correct.
Dad's an expert. Dad is an expert negotiator.
Is that uncle somewhere?
Yeah.
Who's negotiating for you? My dad. Okay. Let's go.
And there will be people in the audience that will have, 5, 10, 15, 20 properties that might not see value in this or are not impacted by what we're saying. But
I'm sorry.
I'm sure. I'm sorry for one, but I'm sure that, understanding some of these things that we've gone through, or Arkadiusz' experience on a day-to-day basis, is that they can take away from this and say, you know what? I wish I had known that if I went through again on my first property. And let's face it, people with 10 properties may have children, may have whatever it might have in their family. And that's something that I hope that other people can really grasp those concepts and share it. There's nothing worse with information. Knowledge is nothing without applying it. And applying it means sharing information. That's why we have lovely Arkadiusz here to share that. And I really appreciate that, Arkadiusz.
No worries. I think, like even touching on that, even if we sit with people with 10 to 15 properties and one buying their first, the same principles apply. So when you are buying that next property, yes, you're very experienced, but you're not experienced in the current game, because the game changes daily. The market shifts, the way banks moves, bank policy, etc. Once again, buying the next place. What does it look like with 5%, 10%, 15, 20% deposit? What does it look like if I pay LMI? What does it look like if I don't? What does it look like if I go interest only? What does it look like if I use the equity from this property or the cash in my offset, right? So the principles apply. So every day you're a beginner, same as me. I wake up, read the financial review after my cold shower, whatever, and then you go, what am I doing different for my clients today? Today we sent an email to clients about, we watched the debates in Parliament about the first home land tax stuff. That's important.
Those big concession changes will have some impact on people.
Yeah, 100%. But that will impact investors too. Because if you have first home buyers running around with no stamp duty between 800,000 to $1 million instead of 650 to 800 in Sydney, they're going to bid more than you.
That's right. Yeah, that's a great point. And so it's going to change some of those dynamics in the Sydney market at the lower end. Yeah, will be more competitive for sure.
Can I ask you both a question?
Yeah.
Would you buy a property with your friend?
I haven't.
Okay. Would you?
Depend on the friend.
Depending on the friend. They'd have to be talking the same lingo for
Yep.
sure.
As a first purchase.
Yeah, I'd probably say yes.
Yeah?
I'd probably say yes. Just
Why?
purely because I'm on a trust basis with the friend. So if it's a friend that I trusted, I would say yes.
Okay. Define trust. What would you trust them with? You just that they make the repayments, etc.
Are you saying me buy it off them? Is that what you're...
No, with a
with
friend.
Oh, with
a friend.
Yeah.
Sorry, as in joint together.
Yeah.
Oh, okay. So I thought you meant
Yeah.
I'm purchasing something off a friend.
Yeah.
It's an
Okay.
interesting question.
Okay. Let me rethink the answer now then.
I'd have to put myself in those shoes, feel those shoes of me and my best mate. I would struggle because I believe you must separate your financial decisions from those life decisions you make with those relationships. I think they're vastly different things.
Would you agree that there's a lot of complexities buying with a friend?
Yeah, I do. And now, like after I heard the question,
I got really scared that
correctly-
you said yes because I was about to shit on the
Yeah.
like,
Well,
why
when
you
I
shouldn't
heard the
buy with a friend. I was
question-
like,
When I heard the
keep it in
question
Arkadiusz.
again, I'm like, okay, that makes sense right
Yeah.
now. So yeah, in that aspect, no, I don't think I would. Yeah.
Yeah.
What's worse, buying a first property with your girlfriend or your friend mate?
It
That
depends how
non-relationship.
serious- It depends if they become your wife
Yeah.
and the mother of your children. But I'll
What
tell
if
you,
they are not yet? Can you give advice to the viewers out there with partners? Not advice, general information.
look,
and
marriage
guidance.
marriage is definitely something that
Yep.
doesn't define your relationship. So I just want to get clear on that because obviously there's people that stay boyfriend and girlfriend for the rest of their life and all that sort of thing. And you don't need a ring and a wedding to define love. Okay, but let's just say that you're just in a new relationship and you've just moved in and you just started going out and then a year later you're buying a property together, probably complex.
Yep.
Okay, so I think buying with a partner is not a bad approach. You know, in my opinion, I think in a relationship you should build separate asset bases before you come together. That's just in my opinion. And the reason why is I think it's important for individuals to have financial security, but sometimes it can make sense to buy together. I think buying with your partner, as long as it makes sense, as long as you understand the option. If you're buying with a partner, we'd assume you're fairly committed.
think you'd be committed.
Yeah, but if you're cheating on them or if you're doing something behind their
Probably
back,
best
what
not.
are you doing? Right? Just period. Why are you cheating? But then separately, why are you buying an asset with this person? The reason I'm bringing up the friend thing is from the 1st of July, the government has released something called the First Home Buyers Guarantee. Okay, the First Home Buyers Guarantee already exists. It's a 5% deposit to a purchase price up to 900 grand. Okay, and what the government does is they waive LMI. Okay, from the 1st of July, the government includes friends in this scheme.
There we go.
Okay, that is scary. So to the investors that have 10 to 15 properties that are waiting for a bargain post-July, dumb people, and I'm sorry if someone wants to buy with a friend, I'm sorry for calling you dumb, but in my opinion, for the large majority of cases, buying with a friend is dumb.
So just go back a couple of steps because I know we're talking to first home buyers.
Yeah.
Maybe just touch on LMI if they're not familiar with that term is, and just maybe go a little bit deeper on that friend scenario because I know for first home buyers they may not necessarily understand those terms and what that actually means for them.
So LMI is essentially lender's mortgage insurance. So banks love when you have a 20% deposit, and if you don't, for the large majority of you, they will punish you. Not necessarily a punish, but punish you with lender's mortgage insurance. It's an insurance that you pay on behalf of the bank to protect the bank. It basically means if you stuff up, they have to sell the property, the insurance will cover the bank, but then the insurer will chase you. It's usually 2 to 3%.
For the shortfall in what they can't.
Correct. So it's a premium. So essentially a 5% deposit really is an 8% deposit. A 10% deposit really becomes a 12 to 13% deposit, but it's a cost. It's lender's mortgage insurance. So the government has released an incentive called the First Home Buyers Guarantee, which basically means you can buy with a 5% deposit and the government will pay for the LMI. So essentially you can walk into a property with a 5% deposit. Different states carry different limits, but we'll just talk about Sydney today because we're in Sydney or New South Wales. The limit is up to 900K. So you can go and buy a $900,000 property for $45,000 right now, right this second. And you can also not have to pay stamp duty if you want to take land tax. So usually you have to do this with a de facto partner and you have to be an Australian citizen.
They were the rules.
They were the rules. Now from July 1, you don't even have to be an Australian citizen. You just need a permanent residency. Scary, okay? Because there are a lot of permanent residents that want to buy property. And you can also buy with a friend. Now, why is it complicated to buy with a friend? Let's rewind back. 3 things determine your borrowing capacity. So I hope that 1, your income, 2, your deposit, and 3, your existing debt, okay? So if you and your friend, Tuan, me and you are best mates, it's our first purchase. You know, we both have partners. We love our partners. We're not cheating on them. And we're going to, that we want to get married and in the future we want to buy with them. Assuming both of our borrowing capacities
Stacks up.
are $500,000 each, but we really want to buy $1 million property. People think that I'm going to put my foot in the door and use some of my capacity. So if me and you buy together, we have now extinguished our borrowing capacity. So even if me and you buy really well, we buy $1 million property, it's worth $2 million and we have equity. We can't service the equity because we've used our borrowing capacity. So this idea of buying with a friend, what you're doing is you're using your borrowing capacity and your debt. So if you then want to get serious with your partner or buy another property, you have this existing debt with your partner. What if Tuan wants to get married before me and then he has kids and he wants to buy a house, but we have this existing debt and we don't come to an agreement?
That's one of the key things about buying with someone that's not your partner, and you can't have these constraints is that everybody lives different lives.
Correct.
And some of your circumstances change very fast, especially when kids come into the picture.
100%.
And so I think that's one of the biggest constraints, isn't it, in buying with a friend.
And sometimes people think, let's say we buy $1 million property and it's worth 1.5. I don't get that 500. We half the equity, right?
Yeah.
After the bank shades it, but that's a separate conversation. But the debt sometimes, if we owe $1 million, I might actually be liable for the full debt when I'm approaching another bank.
Really?
Yep. Some banks will split the debt, but other banks will actually take the whole debt. Because they'll say, well, Arkadiusz, we know that your portion of this debt is 500. But what if Tuan doesn't make his repayments? You're liable for the $1 million. So all of a sudden, a lot of lenders won't service me. So now I'm like, I have this equity, which I only get 250K equity, but I owe $1 million. My borrowing capacity only says, oh my God, what have I done? I have to sell. So you're in trouble, right?
So going back to, you said the legislation. Now that has some issues in itself then, you see, moving forward, because it allows more people, opens up property to more people for the wrong reasons. Is that what you're saying?
I think dumb people win at property, okay? They win at paying more than you. And when you have people that aren't doing their research, buying with their friends, and they're at an auction, they are going to spend 50 to 100K more than you. So these people that are always trying to time the market. So if you're in the market and you have 5 properties, 10 properties, 15 properties, you're about to be exposed to people that shouldn't be borrowing money together, that are going to get the wrong advice.
You're up against.
That is what you're up against. You are up against people not doing their research, going to premium properties. I'm not saying that, for example, let's say that someone isn't dumb, but it's actually appropriate. We have 2 nurses that have a PR that want to live next to the hospital because they work shift work. They don't have family here. It might actually be appropriate for those 2 nurses to buy together. For them to spend 50, 100K more than you, doesn't matter.
Yeah.
Because for you, it's numbers. So all of a sudden, in these premium locations, in these blue chip suburbs,
prices go up.
Maybe I'm wrong. In my opinion, I think this is going to spike it. You have permanent residents that want to live within a 25 kilometer radius of Sydney or a 5 kilometer radius of Brisbane.
Yeah.
They will spike the price.
And that's what we've consistently found in today's, even just recording today and speaking to other guests we've had on, and they were saying very consistently, they've
Correct,
said
it is.
everything that the government's done in order to try to, beef up the borrowing capacity and the helping power given to these first home buyers, all it does is create an uplift and inflated prices on houses. So I think it's always been a
and
full
there's no
circle
stock.
effect. Yeah, and there's no stock right now at the worst of
Perfect
times.
storm.
Nobody wants to build.
Yeah. You've seen the net overseas migration figures?
So I think it's in the hundreds, isn't it? Like of thousands.
So during COVID, we only predicted 200. We call it nom, like Cookie Monster, NOM, net overseas migration.
Yeah.
Insert Cookie Monster here.
Yeah.
But essentially what it is we predicted 250. We're at 400 already for this. Where are they going to live? We have a supply problem. There's not enough new homes being built, all that sort of thing. So we have a shortfall.
Yep.
I was listening to the radio on the drive and there's an incentive to rent out rooms that they're trying to pass in your house. They're like, we don't have a shortfall of homes. We have a shortfall of people not renting out their spare bedrooms. It's like, let's put someone in my house.
Yeah.
So
do we do crim checks on that or?
as long as they pay the appropriate rent, right?
Yeah.
So
Okay.
I think obviously my business will thrive if the market keeps going the way it's going and if it goes up. So maybe I'm biased to that, but I also think think a lot of people are going to make mistakes. I think a lot of people have bought wrong in the last 3 years. People have overspent. People have over-leveraged. People have taken out loans.
And that's because they could, right? The market allowed them to.
Yep.
The economy suggested they should.
Yep. But the government
falsely,
will continue to incentivize that. It's in the government's best interest for property to go up. You know, it's a nice sense of security. You know, my land is appreciating, you know, so it's the government's intensive. So if Australians are too scared to buy, all right, let's open up to PR. Oh, couples don't want to buy together. Friends. I think if anything, policy is going to open and it's going to reward people purchasing more and more and more.
Yeah, it's an interesting concept, and it'll be interesting to see where this pans out and how it pans out moving forward. And we're only months away, aren't we, from all this unraveling?
We are, and there's a big fight at the moment with this first home buyer's choice, which, you know, was really good for a lot of first home buyers. To give you context, with the stamp duty is a big expense, right, for anyone buying their first home if they want to buy outside of the stamp duty exemptions. So to give you context, if your borrowing capacity is between 1 to 1.5 million with land tax, so I have clients at the moment that can buy for 1.5. If legislation passes in July, their purchase price goes to 1,150.
Right.
That hurts because these people want to buy the $1.5 million homes.
Yeah.
Right. So what do? So all of a sudden from July 1, I think there's 2 different markets at the moment. In Sydney, at least, there's the $1 to $1.5 million market. That's extremely competitive because there's no stock. And then there's the everything below. And the government's really trying to push that everything below. So it's this juggling act. So unfortunately, if you're watching this, if the land tax first home buyer choice passes, then your capacity will significantly reduce. But I think it's an interesting time in property. I think it's always an interesting time in property.
Yeah, it's always never a boring time. There's always things happening, right? And if it gets too hot, they can just take a cold shower, like you've mentioned a couple of times. So that's part of your morning routine.
I'm just joking. No, I'm too scared to. Sometimes I dabble, you know. But no, my mindset, like with anything, it's a choice. Like I can wake up and be afraid of these changes because they impact a lot of our clients, a lot. You know, my business model, I got emotional at our last event. I almost cried and I'm being vulnerable now. But, you know, my business has gone through different phases and roller coasters. And, you know, I'm in a very fortunate position where my strategy calls, which is the entry level into our business where you call me, was $250 and it booked out for a year. And then strategy sessions where we show people options were $1,000 and people were paying this. So pretty much $1,250 before you even sort of begin your process. And people were paying for it. Why? Because there's no agenda, there's no kickbacks, there's no property being shoved down your throat. You actually walk out with options. And, you know, it was additional cash flow of $30,000 to $50,000 of just clean cash flow. You know, it's a billable time. So I got to this stage where, you know, 3 months in, January, February, March, started kicking off, calendar booked out. I was like, I'll ride this till December. It's going to be really good for me. I'll be able to grow the business with this additional cash flow. And then the government came and changed the legislation. And I was like, oh shit. I have 2 options. One, fill a room with 40 people that would have paid me $1,000 each, say minimum more, and educate them in the exact same way. Or I spread it out and just pay these individual choices. And then I was looking at this room with 40 people and I was like, I've just lost $40,000. There's a room with $40,000 sitting here. And then today, that's why I'm in a suit, I have another room with 40 people and it hurts. You know, as a business, like, okay, sure, I'm wearing a nice suit, whatever. This is a tie from an op shop that I bought for $2, right? So I'm smart about the way I buy things as well. And no one will pick it because the way you address yourself, the way you press your shirt, all this sort of thing. But that hurt. You know, as a business, I've lost $80,000 of clean money to help people. You know, so these legislations affect businesses too. And people are like, why aren't your events free? Because we do work and we provide you advice. You know, why isn't this, you know, like, why do you charge for a call? It's because you will walk out on that call with information. So when there is, when there's
value exchange.
Yeah, correct. Yeah. And so to go back to mindset, you know, like if someone's pushing an agenda on you, whether it's news or whether it's a podcast or whether it's something, and there's no value being provided to you apart from you should do this, don't listen. Unless someone's like, you're fat and you need to go to the gym, maybe you should listen. But there's a different approach, right? So it's hard.
Different problem to tackle. Yeah, I'm all with you there. And legislation does have huge impacts on industries without really considering ramifications. But look, I think it's really important that we talk to advisors that don't have an agenda, that want to help people. And I think that's, I guess, the very essence of why we've got this property podcast that we've started, is because we want to bring on people with no agendas.
Yeah.
That we genuinely have believed in what they speak. We've seen their clients come through the doors for depreciation, given great advice, and they've gone on to buy multi-properties. Yeah. And, you know, that's not for everybody. It doesn't have to be. But the fact that you can is a testament to some of the work that the guys have done, and including yourself, Arkadiusz.
Yeah. And like just touching on Duotax, and, you know, like Duotax didn't pay me to be here. And, you know, we've been doing business for 5 years and we've never met.
Yeah.
Ever.
Yeah.
There's no, like, I joked to Kim, I was like, Kim's one of the employees, I was like, where's my Christmas card and my box of flowers and my champagne? Like, you don't do that. And that's why, like, people are like, oh, you should send everyone a referral gift and a thank you. It's like, you thank me by doing good work for our clients. I refer you, not because you take me out for brunches and lobster, and like, we've never done that. No. You know, we shook hands today. It was like, I'm sorry. It's like, I get it, man. I get it, bro. Like, and I meet you, and, you know, it's not like, hey, bro, let's go out for a beer and a coffee. Let's get drunk and do. No.
Dan
was
like, going to ask you though.
Well, yeah.
Cross off the list. Yeah. Even that lunch too. Don't worry
Cross
about
it
that.
off. Yeah. It's like there's actually a box of flowers and champagne sitting right there.
Yeah. So for the
to make up for the 5 years.
Yeah. No, but like, and that's the thing. Like, the advice industry is changing. And I think the fact that you've never done that speaks levels of you. You know, some people will say that's bad business because you're not thanking your referrers in a certain way. It's like, you thank me by doing great work. Every time I call you guys, even if we don't buy, like sometimes we do 10 quotes for one client and you're never like, we're not doing another one for you, Arkadiusz. It's like, no, you guys get it.
Yeah.
You know, hey, you know, Kim, hey, Michelle, what's this? And they're never like, Arkadiusz, you've asked us 7 times for this. It's never that. It's like, thank you. If you go ahead, the report is this much. This is the level of complexity. And that's beautiful.
And that's okay with us. We're satisfied that people come to us to engage with us and even trust us to give the depreciation estimates. Right? That in itself is, we're grateful to even get that business. And I think that's where a lot of advisors should come from. Yeah. But yes, and I'm not going to say that I don't want and dine everybody. There are certain people that expect that, but you know, I think for the most part, people that don't and they come back, it's probably because they value what we do. Yeah. And sometimes that's enough, and so that's okay. And I'm sure you feel the same way. You don't wine and dine every single person that you meet with.
I just don't. Yeah, people are like we have a rule where we actually, like, it's weird, but we don't thank our referrals with gifts because we don't want people to refer us because we're giving them something. I feel like our businesses are different, but when it comes to financial advice, if someone is referring me someone and we make an income and we share part of that, it's a little bit conflicted, in my opinion. And there's also registers and stuff where our gifts have to be to a certain limit. You know, like, you can't like give people an umbrella over $100 and stuff. Same as doctors. Imagine your doctor was prescribing you medication because
based on
they were getting kickbacks, right? So the same applies in financial advice. There's a limit to how much you can get on a kickback. You have to disclose commissions and all that sort of thing. And I think, you know, I'm glad that you don't put me in an uncomfortable position where you invite me to lobster lunches or champagne dinners and stuff like that, because it's uncomfortable.
For sure.
You know, and we also don't have the time. You don't, I don't. You know,
it was a struggle to even get to this podcast in the first place.
Yeah, I was late. Sorry,
I was late. Not to be blamed. A couple of us didn't make it this morning either. Yeah, with the traffic on the M4.
Yeah. So mine was like, I just got stuck on the behind a truck, and I was just like, oh my god. And a number called me, and I was like, oh, is this Duotax? And they're like, yep. I was like, I'm so sorry, I'm late. Blah blah blah. And then they're like, oh no, I'm actually a referral from this client. And I was like, oh my God, I'm sorry, I'll call you right back. I'll call you right back. Just send me a text. It was
all going bad. That's all right. We made it. That's the most important thing.
Yeah.
So, Arkadiusz, you mentioned a bit about, you know, how you meet with the client. So how is the best way for a client to sort of get in contact with you? You say you had groups of people that come in there and you know, talk us a bit that. How can people sort of get some info?
I was doing some, had a look, and you were doing property seminars. Is that the right word you like to use for your education piece?
Yeah, like I guess you can, property symposium, investment masterclass. The event is literally called How to Buy Property in Sydney at the moment. But essentially where I'm trying to sort of take myself, it's very hard for me to have a one-on-one conversation. And you know, this idea of my course being $250 and strategy sessions being $1,000 and having a calendar fully booked, I thought I was happy. I genuinely thought I was happy. And then I woke up, I'm being vulnerable again, but I woke up on a Monday and I called my best friend Graham, who you know, and I looked at my calendar, it was back to back, and I was like, bro, I think I'm depressed. I was like, I don't want to go to work. Why? Because it's weird, but every call I was saying the same thing, right? I was just like, what do you want to achieve in the next year? First home super saver scheme, 5%, 10% deposit, 15% deposit. And then in the strategy session, I'm not kidding. Like I have an investment banker and an economist that sat in my session and that already own properties. And you know what the session starts with? This is principal and interest. This is interest only. Okay. Principal, usually the rate is lower, but the cash commitment is higher. Interest only, forever home loan. They're like, oh. And I was like, this is an offset account. This is how an offset account works. This is what happens when you offset principal. This is what happens when you offset interest. It's literally so basic. And then do that.
So basic, but still a lot of people have never sort of had the opportunity to learn that.
Never. But do that 300 times.
Yeah.
It was Groundhog Day. So the events are essentially a strategy call and a strategy session in a group environment, yet we still obtain people's documentation and you still get tailored options at the event to show you your limits, your options, etc.
Makes sense.
What happens is on the back of the event, we have an advisory panel and there's options to obviously contact me. Look, I say that I don't get it, but I've called every single person that's coming to the event already. I can't hey man, thanks for coming. I really appreciate it. What's your unique situation?
So it's great for beginners and people that want to really get into property and understand the basics and a bit of a crash course, right? And what you should know.
Yep.
And some of those things you mentioned is like, I take it for granted, right? Like we take it for granted, but there's a lot of people out there that don't know. Everyone that's probably under 25, 20 that don't know about these basic things like offset accounts and how to manage that.
The second part of the event, essentially what we do is we dive into actually how to look. And then the week after, there's an online event where based on your budget, you actually put your sold properties into a sheet. And then online, what we do is as a team, collective team, so buyer's agent, property valuer, mortgage broker, myself, we actually go through the properties that people have put in and we put expert data. So sorry, Duo Tax, but you basically got a list this big to give us depreciation estimates on all the properties. Awesome. And what we do is, what we hope is that provides you more information to go to the market better educated. So is the property, is that event for beginners only? No. We actually have mortgage brokers coming to the event, funny enough, which is weird because we are a finance business. And I got angry at first because they follow me on Instagram, etc. But then I'm like, okay, they steal our info, but then we're just giving better advice to a group. You know, so I was like, I was going to cancel the ticket and stuff. I was like, hey, why are you coming? They're like, to be fair, like the way you guys do property is different and I want to learn I want to buy, but I'll do my own finance. I was like, that's cool. So your ticket's double the price. So yeah, to reach out, like obviously we've got Instagram and newsletters and things like that. The real big approach for me is everyone really wants to speak to me. Please understand that I am the Robin in my team. My support, my brokers, my accountants, Duo Tax, they're my Batman. You know, so I'm just the person that knows how to ask questions and find a team for what you're trying to achieve. Yes, there's elements of where I get involved. There's elements of me helping. And yes, I promise you there'll come a point in time where we'll sit down and really work on strategy, like real work, really interesting stuff. But a lot of the time you just need the basic stuff first. You need to go look at the sold section and then let's go from there. So please come to the event. Awesome. You know, we're going to run them once a month, hopefully. You know, every time we got a room full of 40 people, 40 is a good number. And on the back of that, we do an online event where we actually go through properties. So whether you have 15 properties, you know, put some of the properties you've bought in the sheet. Get our feedback, you know. Fantastic. And then we go from there.
Well, thank you, Arkadiusz, for coming on today. It's a real pleasure not only to be with you and meet you, but it's been a pleasure to really have a chat to you and really understand the person you are and who you've come to be as a business person. And I think the audience is going to get a lot out of that, especially the first home buyers out there that are maybe delving into the market for the first time. Well, there's no one better to speak to than Arkadiusz. Of course.
It's all we do. So essentially, just to summarize, we help first home buyers become sophisticated investors. So that's what we focus on. If we think you can't do that based on your circumstances, we show you where you need to be in order to do that. And our agenda is that you buy more property. So do we have an agenda? Yes. Why? Because if you buy the right one first, you'll buy the next one. And if that's not what you want to do, that's cool. You'll sell that asset and buy a better one next time. You know, so I guess that's what we do. That's how we help, and that's what we specialize in.
Correct.
And if you're somewhere in between, or if you've already bought a property and you're not a sophisticated investor yet, maybe you should restart. And that's why we're there again.
And there's nothing wrong with that, is there?
You know, nothing wrong with changing your haircut, the way your gym routine, or anything that you want to do. There's nothing wrong.
Yeah. Awesome. Some good life advice here. Definitely. All right. Thanks so much, guys. And I appreciate you tuning in today. And cheers.